What is DeFi? How this will revolutionize the financial system. The centralized finance DeFi is likely to have a significant impact on how banks operate in the future, and even has the potential to shift the structure of the whole financial system at a macroeconomic level. Before we discuss and substantiate this hypothesis, we would first like to introduce the core concept of DeFi. Decentralized finance, or DeFi, in short, is an umbrella term encompassing the vision of a financial system that functions without any intermediaries, such as banks, insurances, or clearing houses, and is operated just by the power of smart contracts. DeFi applications strive to fulfill the services of traditional finance, also coined as centralized finance or just sci-fi, but in a completely permissionless, global and transparent manner. DeFi applications could be at the verge of challenging traditional finance actors on various fronts. The vision of a new financial system accompanies the blockchain space since its inception. However, while it has been an aspirational dream for the blockchain community in the past, the vision of a new financial system has come some steps closer. Since 2020, DeFi is growing at an astonishing pace and billions of dollars have been put in the ecosystem. The growth is mainly led by applications, also denominated as protocols, that are built on the Ethereum blockchain. In this video, we give an overview of the actors in the DeFi ecosystem from an economic point of view, introduce the maturity stage of DeFi, and explains the potential of DeFi to outperform the traditional finance system in the years to come. Commercial banks. The primary business model of commercial banks is to accept deposits, and to give alums to its clients, borrowing and lending an elementary cornerstone of an efficient financial system, as holders of funds get incentive to provide liquidity to the markets, and in exchange ends are returned under otherwise unproductive assets. DeFi protocols enable for the first time to borrow or lend money on a large scale between your no participants and without any intermediaries. Those applications bring lenders and borrowers together, and set interest rates automatically in accordance with supply and demand. Moreover, those protocols are truly inclusive, as anybody can interact with them at any time, from any location, and with any amount. In fact, the recent hype around DeFi applications is largely driven by advancement of borrowing and lending protocols, such as Compound. In contrast to traditional finance, laws in DeFi are commonly secured by over-collateralization. However, companies such as Avi are currently working on enabling uncollateralized loans similar to traditional finance. Investment banks and issuers of financial instruments. The business model of investment banks usually involves the advisory of financial transactions. Also, the creation of complex financial products, and the management of assets found the helm of investment banks. DeFi protocols are already offering similar products. For instance, Synthetics is a derivatives insurance protocol, which enables the decentral creation and trading on derivatives on assets such as stocks, currencies, and commodities. Also, the central asset management for cryptocurrencies is evolving. Yearn Finance, for example, is an autonomous protocol, which search for the best yields in the DeFi space and invest automatically for its users. Exchanges. The function of an exchange is to organize the trading of different assets such as stocks or foreign currencies, between two or more market participants. Even the exchange of cryptocurrencies against fiat money, dollar, can be attributed to CeFi. As the regular holders of cryptocurrencies needs to use exchanges like Coinbase or Binance, which are centralized organizations to swap a unit of cryptocurrency against another. Now, with the emergence of the centralized exchanges, holders of cryptocurrencies no longer need to leave the crypto space for swap their tokens. Insurances. An important function of insurance is to smooth out risks and bring security for market participants. An example of the centralized insurance is Nexus Mutual, which offers insurances that cover bugs in smart contracts. Since everything is based on smart contracts in DeFi, vulnerability in the code of smart contracts is a fundamental risk for DeFi users. The centralized insurances are still in their infancy, but it can be expected that a large amount of more sophisticated insurance models have the potential to emerge in the DeFi space in the future. Central banks. So-called stable coins are based on blockchain protocols that have the principal price stability inherently encoded, and thus, fulfill the function of a reserve currency. The introduction of stablecoins set the foundations for the functioning decentralized financial system, as they enable participants to engage with each other without the underlying risk of price volatility. There are three options how cryptocurrency can reach price stability. First, stablecoins can reach high degrees of price stability by packing a currency to other assets. For example, for each used unit of USD coin, a real US dollar is held in reserve. From a decentralized finance perspective, another interesting approach is the issuance of stable coins by using other cryptocurrency as collateral. Thirdly, there are more experimental approaches that aim to reach price stability without the use. For instance, the protocol Ample4th automatically adjusts the supply of token in accordance with demand. Crypto-based finance has reached the next maturity stage, as it covers all basic functions of a financial system. DeFi has reached an important intermediate step to become a substitute for traditional finance solution. While crypto-based finance solutions are merely capable of realized efficiency value transfers in the past, now the time value of money is reflecting to crypto finance. Three maturity stages of the centralized finance system. Stage 1. Efficient value transfer. Until now, centralized exchanges and wallet providers have been the only successful blockchain business model at scale. The reason for the success of centralized exchanges is that they are the main entry point to the crypto space. The common user needs to swap fiat money, US dollar, against a cryptocurrency before being able to interact with services in the centralized finance. Furthermore, wallet applications are established that enable users to safety store and transfer the cryptocurrencies based on those two applications, exchanges and wallets. Efficient value transfer between and no parties could be conducted for the first time without the need of traditional finance sectors. This enabled the crypto space to fulfill limited functions of a financial system, namely speculation on assets and the facilitation of payments. Thus, this intermediation of financial firm occurred but only if savers of traditional finance wanted to diversify the portfolio towards crypto assets, or needed a frictionless payment system. We proposed this to be the first maturity stage of a decentralized finance system. Stage 2. Connecting savers and borrowers. Still missing was the ability to deal with flows of funds from savers to borrowers and vice versa. The function of a payment system could be advanced with the development of stable coins, the centralized exchanges and borrowing lending protocols. Thereby, DeFi developed the necessary platforms for facilitating the flows between savers and borrowers. It might be no coincidence that the start of the explosive growth of the whole DeFi ecosystem could be observed with the advancement of the landing borrowing protocol Compound. Since Compound started the distribution of governance token, COMP, on June 15, 2020, the whole DeFi ecosystem showed a step growth trajectory. Functioning landing borrowing protocols such as Compound might have been the missing cornerstone for the foundation of a property working the centralized financial system. This can be marketed as the second material stage of the decentralized finance system. Stage 3. Competing for traditional finance funds. DeFi can be described as a platform that is competing with traditional finance firms for the same resources. However, DeFi is an encapsulated system which not obeying the same rules as traditional finance. In particular, national laws does not apply and regulatory policies can hardly be enforced in the DeFi space. This might be a major competitive advantage over the highly regulated traditional finance firms. Conclusion: crypto-based finance is here to stay. For the first time in history, A financial system is developing without intermediaries at a large scale. So far, DeFi applications cannot compete in terms of security, speed, and ease of use with traditional finance solutions yet, but DeFi has produced real working applications. They have already managed to attract billions of capital. Thank you so much for watching the video. If you liked this video, hit the like button, also subscribe to our channel and press the bell icon so you never miss an update.